What is unrelated business income tax, and do you need to be concerned with respect to this special taxation that your IRA can incur? Well, first I'll say that yes, you do need to be concerned, but keep in mind that a concern does not necessarily always mean that it's a negative. It just means that you want to make sure you address the taxation and identify methods by which to either mitigate that taxation or pay the tax and recognize that if you're paying taxes, you're generating return. So let's go ahead and first define what is unrelated business income tax, for short, UBIT. Now, you'll also hear a variation of UBIT known as unrelated debt financed income tax, UDFI. And that's when we're talking about an IRA acquiring a debt finance piece of real estate or investing in a real estate syndication where there's debt financing associated with the property. So first, let's break down what is unrelated business income tax. And the best way to do this is let's go directly to the IRS website. So if we go to irs.gov and we look up unrelated business income tax, we see here, even though an organization is recognized as a tax-exempt entity, it still may be liable for tax on its unrelated business income. For most organizations, unrelated business income is income from a trade or business regularly carried on that is not substantially related to the charitable, educational, or other purpose that is the basis of the organization's exemption. An exempt organization that has $1,000 or more of gross income from an unrelated business income activity must file Form 990T. With respect to real estate investing, what if I want to, let's say, flip multiple houses in my self-directed IRA? Will that be considered an ongoing trade or business? Well, it certainly could be considered an ongoing trade or business. Now, there's no clearly defined guidelines on how many flips you can do. Can you do 2 flips? Can you do 3 flips? Can you do 4 flips? There's no clearly defined guidelines. So it's really, really important that you understand if you do too many flips, you could certainly trigger unrelated business income tax. And there are other prohibited transaction rules that you have to understand as well if you're going to flip houses in your IRA. So we would encourage you to talk to your CPA or your tax planner with regard to how many flips could you potentially get to then reach a point where you could have unrelated business income tax. Now, rental income, interest income, that's all flowing back. That's all passive income. That's all flowing back into the self-directed IRA. The conclusion here, when you hear unrelated business income tax, UBIT tax, you have sort of 2 categories here. You have the ongoing trade or business, so investing in partnerships or LLCs or maybe flipping houses where you're doing too many flips, and then you trigger the UBIT as it relates to running an ongoing trade or business. Then separate, you have the UBIT as it relates to acquiring property with debt financing. And this is oftentimes referred to as unrelated debt financed income tax. And remember, that's based on the percentage of the property that's debt financed. And keep in mind, if your IRA is invested in a syndication, a real estate partnership, and that property has debt, you have that income flowing through, and you'll need to address unrelated business income tax. And lastly, remember, don't fear it, embrace it. Until the next video, keep leveraging compounding interest in the absence of taxation.